Good day, everyone, and welcome to this case study. Today, we are going to do a case study on EURGBP. So, as you can see on the chart, we are currently on a downtrend. So, what we are trading is actually a pullback in the market. The market mitigated the demand zone here and rallied up to the liquidity here. We took profits here because there is a supply zone here. So, that's why we took profits in this area. Let's go down to a lower time frame to see what actually happened in the market. As we can see on the 1 hour time frame, market mitigated a clear demand zone here. Then we had a change of character here, which led to the pullback in the market to this liquidity zone. So this is what the 1 hour actually looks like. The 5 minutes mitigation, the 5 minutes demand, 2 minutes demand, and another 15 minutes demand. So this is what it looks like. So let's go down to another lower time frame. Then in this case, what we will focus on this first trade here. Let's go to the 15 minutes time frame. Now, as you can see on the chart, we had a very clear change of character. Now let me zoom in to show what the chart looks like. Now this is it. We had sweep, change of character, sweep of inducement, the mitigation. So we actually took this zone, but we refined it in the 5 minutes. We refined it to an inside bar demand zone for trading. So market rallied up from here up to this point. Let's go down to the 5 minutes to show you the entry. Particular candle where we marked out where we refined it from. Now this is the 5 minutes time frame. Let's zoom in to see what actually happened there. So as you can see on the chart now, markets mitigated this higher time frame demand zone. Then when it did it the first time, it used that place as liquidity, which later swept at this second time. So here is the Asian low. Market swept it after this session. That is, swept it in the London session. Now, after sweeping this low, market changed character. It got a swing high in the market. Now, we had an inducement here, which the market later swept before mitigating this our refined demand. So why did we actually refine this demand to this point? Now this is what actually happened. When market swept this low, came up a little bit and mitigated this supply. After mitigated the supply, still came down again to mitigate the demand here. So after mitigating this demand, market came up a little bit, broke this high, then came down again. So when it came down later on, it mitigated this demand zone here, this candle here, then before it broke before it changed character. So where we took our entry from, where we refined it to, is to this demand zone here. So it's very quite valid when we are trading. If I'm to draw it on the chart, it's something of this nature. The low, high, sweep of the low, then minor structural movement here, then a change of character, then mitigation, and move. So here we had the Asian low. We had the market sweep the Asian low. Then later on, market swept it, then took out this swing high. Now in this area, that's where we have the demand zone. Then within that demand zone, we have a refinement here. So it's in this place that we took our entry. Then we traded from the high here to refined it down to this point. Then we traded to a liquidity or up there in the market on the higher time frame. So that's what we actually did this area now. Now market traded from this point, traded from here to the higher time frame supply liquidity, the higher time frame liquidity. So for this trade, what we actually had here is 1:5.33. So let me just say 1:55 risk to reward ratio. Now let's go to the higher time frame to see the liquidity, where is swept liquidity in the market. So this is the area where market swept liquidity. That's the area where we took profit. So we notice this whole areas here. So that's why we took profit there. So that's it for this first trade. Now let's go over to this second trade to see what actually happened in the market. Now we will start from the 1 hour time to see how price moved in the market. Now if we zoom in, we'll notice that the market actually what the market did is that after it changed character here, we rallied up to this side. Then in the process, we left liquidity here. That's inducement. That is inducement. Then for the trade, what we actually did here was we had the demand zone here on the 1 hour. Where we took our entry from was in the 15 minutes time frame. So let's go down to a lower time frame to see what actually happened in the market. So this is the 15 minutes time frame. Let's zoom into the chart. So as we can see on the chart, after market broke structure here, it's mitigated this demand, broke another structure, then left inducement here, or let me say liquidity. Left inducement here, which it used to mitigate this demand zone here. So for this demand zone, we traded from this refined demand zone, that is this candle here. So we traded from that point, we refined it to this point to increase our risk to reward ratio. Now for this trade, what we had approximately 1:27. So let's see, we took profit at the higher time frame liquidity. That will give us this risk to reward ratio here. So we took profit up here for this trade too. We did that for the first one and we did the same for the second one. So that's it. If I'm to draw what actually happened in the charts, this is it. Market created a low, a high, another low, then change of character into demand mitigation. They had series of uptrend here, which markets use these places as inducement, then mitigated the demand zone here for moving. The break, the change of character, the demand mitigation here, the demand here, and inducement here. So this is actually what happened within this area in the market. You will likely see this more often. One thing you need to add in your confidence is the trend, and you notice a candle like this and a fast movement to the upside or to any direction. Just know that that particular point of interest will actually hold in the market, but still manage your risks because you can't really control the market. So let's go over to the third trade. So we are back to the 1 hour time frame. Let's select this particular trade and focus on it. So for this particular trade, we took our entry from the 15 minutes time frame. So let's go down the 15 minutes time frame to see what actually happened. So this is the 15 minutes chart. Let's zoom in to see what actually happened in the market. So for this area, market actually did something. After market mitigated this our previous trade with the 15 minutes refinement, we had a change of path again. So we had a change of character here. Market mitigated the 1 hour demand zone here, but we didn't take the trade because the point of interest is very large, and chances that the market will come down to this particular candle here is very low. This particular one, chances that the market will come down to it is very, very low. So that's why we didn't take that trade. We waited for a confirmation. And one of the reasons why we didn't take that trade is that it is within the previous point of interest. So if you look at this next trade we entered, it's the point of interest is not within the last point of interest we entered the market. That's this one. Look at where it is. It is outside this area, this 5 minutes demand zone. So that's one notable thing you need to know. For this one too, the same thing. Our entry here now is not within this 5 minutes refined demand zone. So it is outside it. So let's focus on what actually happened here. So markets broke structure here after this mitigation. It changed character here and left the demand zone here before moving. It swept inducement here. So for this one, we did the same thing. Here too, we had a change of character. Just that I didn't talk much about it. We had a change of character down this zone here. Down this area here. We had a change of character here. Same thing happened in this zone too. Same thing happened in this zone. So let's see what actually happened. After this break here, market left series of liquidity here. Now, after market left series of liquidity here, rallied up to this point. It later came down to mitigate this demand zone here. So after this, after the change of character here, we mitigated the demand zone here before moving. So after mitigated that demand zone, market rallied up to our area of liquidity on the higher time frame, which is market rallied up to our area of liquidity on the higher time frame, which is this area here. So for this trade, what we have is 1:18.26. That's let's put it as 1:18 risk to reward ratio. So that's what we had for this third trade. Let's go back to the 1 hour time frame. So that was it for these 3 trades. First one, 1:55. Second one, 1:27. And third one, 1:18. So that's basically it for this case study. So what you focus more on how the market moved within this area, and within this area. See you on the next case study.